Hey, I want to welcome you guys back to the podcast today. I'm Joe, and once again, is my co-host and co-star here, Kealahni.
That's my name.
Real quick, we're just back here and talking about some of the things that make this industry important. We want to bring it to the consumer and our borrowers and our buyers, and bring it in a way that is easy to understand and something that's friendly. This industry, and when you're trying to buy a home and purchase things, sometimes it's stressful, and we want to make it less stressful for you with education.
Yes. And, speaking on that, we're going to just touch a little bit about what our show is going to be about. So that way you guys are watching moving forward can really just grasp all the ideas, because we're going to talk about so many things. And in our other shows, we talked about just a variety of things, not just about living in Las Vegas, but also hiccups and things we see, a lot of common stressors. And today we're really going to get into the biggest one, which is credit, because boy, I have a lot to say. If I have like a little rage rant, it's because I'm actually personally being affected. So as a real estate agent, we're not immune to these things, but overall our job here is to just talk about things that are real, humanize things, because at the end of the day, consumers are real people. We're not just numbers, we're not just robots, we're not just credit reports, right? When we go to buy houses, when we go to buy cars or different things, it's important to understand all the factors that come into consumerism, especially living here in the Valley. And then we're going to talk about pitfalls, about zombie plots. Who knew that zombie plots are going to be a real big thing? And I want to point out, and I'm going to crack on you, your little Joe Page Focus Drive Impact soon will have like a little mini icon that has my beautiful face on it, because I'm going to be here forever.
You see, she emphasized little mini icon,
okay.
The little mini icon.
Okay.
No, really, and I think one of the things you touched on you touched base on is that's really important is credit.
Yes.
I don't think people realize. I mean, we always hear the whole idea that, hey, you gotta have decent credit, but I don't think people realize how soon they should focus on that prior to looking at purchasing a home or anything in that matter, right? And the things that in your story you're going to tell us here real soon, but the things that could happen in the middle of, hey, I want to buy a home, and you move right past your credit and you don't realize there's things in there that you need to repair or get prepared for, right?
Yes.
So why don't you talk to us about some of that stuff?
So I want to point out too, it's not just buying a home, it's also renting, right? Credit affects everything we do in this economy. So even if you're buying a car, but I know we're house buying specialists, so let's get into that. I think you should go at least a year out. And from my personal experience, which is bubbling inside of me, so I can't wait to share. But just from a educational standpoint, I believe if you are looking to buy a house in the next year, you should go ahead and run all 3 credit reports: TransUnion, Equifax, and Experian. You can do them for free when you log into each one and have a full report. What it does, it goes over every time somebody like a lender such as yourself has done a hard pull. It also goes over anybody who's done a soft pull. And here's a tidbit. If you get a soft pull, you do not legally have to give permission for any entity to run a soft pull on your credit. That means anybody can review your credit profile, see what you're doing over where you've lived. They could see all the banks you bank with. They could see all your accounts as far as credit cards, mortgages, home loans, in addition to car loans, things like that. This puts you in a very dangerous position because, and this is going to get to my story, don't you worry. Because if you don't know who's accessing this information, not only could it jeopardize you as far as getting your identity stolen, it also jeopardizes you as in applying for false collections things against you and damaging your overall credit report. So when you do go to buy, which most people come in, they say, hey, Joe, I want to buy a house. What do I do? What's the first thing you do?
We run a soft pull.
You run a soft pull. And then based on that soft pull, you're like, oh, whoa, you owe Toyota $7,000.
Oh, boy. She's about to start.
I'm about to start. I feel it bubbling inside.
Let's go.
Yeah, but then that's the thing. And then you have to say, okay, well, now we can't buy a house because we have to get this one thing repaired. So instead of buying in 30 days, 45 days, now you're pushing it out a year.
Yeah.
And so here it gets to my beautiful story, right? Which, Joe, I called you crying last week.
Actually, you called me mad first. And then you kind of calmed down, and then you got into the emotional side of the house.
Yes, because I am very proud of my credit score. My credit was 833, and I've used you how many times, Joe, to buy a house? A lot of times,
and so you should be very proud of
that.
And
out of every time you've ever pulled my credit, what has been on there?
Virtually nothing.
Exactly,
nothing
perfection.
Yeah, well, okay. Yeah, nothing at all.
Say I'm perfect.
Perfect.
Okay. And then also, how am I about paying people?
Always on time. I don't ever remember a point where I got an invoice for anything and not paid it within 24 hours.
Yes, I take pride in that. Lannisters always pay their debts.
Oh, my God.
So that's what gets to the story where it's emotional. And I can feel that if I was helping a client, it would be extremely emotional because I was emotional as a licensed agent, as somebody who invests in properties and does business all the time. I had 47 soft pulls on my credit from various credit agencies. And I kept getting these calls that debt consolidation. You owe so much debt. Would you like to get a loan? I'm like, no, stop. Why are you subscribing and calling me? Then after we did the credit report, after we ran it, a month and some change ago.
Yeah, something in April is when we ran it.
Because I'm also currently applying to buy a home. Perfect. There was no inquiries. There was nothing in collections. Everything's paid on time. You're like, yeah, there's no problem. We're going to go ahead and proceed, right? And then all of a sudden next week, I see Experian alert because I'm one of those sticklers. I apply for all the credit bureaus. So if there's anything that fluctuates in my credit, I get notified immediately. 133 point decrease in 24 hours. So yes, I called you in a straight panic. First of all, I was ready to blame you. I was like, Joe, what did you do to my credit?
I heard it in your tone. And that's what I was like, hold on, let me go. Okay, I pulled this over a month ago. What are we talking about?
What is this? And then I see Verizon. I'm going to name drop because I'm about to fight them tooth and nail. I closed my Verizon account with them in 2025 of last year because I went to T-Mobile just because the promo at T-Mobile was so much better for military.
And the service is much better.
The service is better, but also they were giving the military plan. Why not go where you're going to get a lower bill, right? They charged me again, October 2025. They tried to say I owe $132. They have not sent me a bill. They have not sent me any kind of email notification, nothing. I went several times to the corporate office because there's different offices. I've called. They're like, nope, your file is closed, nothing. They all of a sudden ran a soft inquiry in June, the beginning of June, or tail end of May, and then they applied straight to collections with the MRS of $132. I've been calling all day, even up until now, calling every day. What's going on? Like, we can't help you. Just pay it. They're like, you should file bankruptcy over $132. But that credit dip puts me in such a negative zone that I couldn't even, Joe, go rent an apartment. Like, if I wanted to go rent a house, if I wanted to go buy a car, if I wanted to do anything, it just has hit me so negatively. And so I made one simple mistake. And you know what that was? I forgot to lock my files.
Yeah.
So I want you to explain that because you probably could do it better than I can. When you lock your credit report, what protection does that give you?
Well, it's overall protection, 100%. A credit company. So say me as a lender and I go to see your credit worthiness for whatever the reason may be, right? I wouldn't do it unless you had filled an application at 1003 and asked for me to pull. But just say, I don't know, say one of these lease to own companies. They go to pull a soft pull. They don't pull a hard pull, a soft pull, right? And they say, okay, as a soft pull, it's going to show file locked. And that's for all three. That'd be Experian, TransUnion, and Equifax, okay? What that protects you is it doesn't hit you on points. First, soft pulls don't hit you on points. But if it was a hard pull, it doesn't hit you on points. Doesn't decrease your score. Then you have to be notified. So if it's a hard pull, you'll be notified that somebody tried to pull your credit report. Then you can reach out to the company, find out why, right? Per law, Fair Credit Reporting Act, they cannot pull your credit report without a signed e-sign showing that you signed and authorized you to pull their credit, okay? Plus, you need socials, and there's a lot more that we need that's entailed with us pulling a hard pull credit. Soft pull, like you said earlier, it's easy to pull.
It is. There were so many inquiries on there. It kind of shocked me. Even like Toyota, I have paid off my car, which you've known this because I bought two houses with you since I paid my car off.
And not once was there a note
Not once.
There.
And now they're saying I owe them like, I think both $1,300. Thankfully, it's not collections and it's not showing that it's not overdue or anything like that. But even me going and showing that I have the title and that's
the strange thing about it. How do you have the title if you still
and a letter said a letter from the Toyota financial company that it is paid in full, and it's only reflecting on my credit report and not my husband's. And again, a lot of our accounts are joint, so it's like, how is this only affecting me negatively on like it impacting me and not him, which I am very thankful, right? Because if it's not affecting him negatively, then we can still proceed with buying the house, right? But also on my end, not only is my pride hurt, but this could affect us negatively later because if I have to, I guess, fight this, now I have to pay more money up front out of my pocket. And you know what? The 133 points might not come back, which is crazy because I was told or advised, right? Which I think if you are in this position as a consumer, do not go based on what the collections office
No.
advises you. They advise me just go ahead and pay it. Okay, yes, it's easy for them. But guess what? Now you're admitting that you didn't pay this and it's in collections and you will not get those points back.
Yeah. Well, either way, whether and I've had this happen numerous times. People have said, well, they said to just pay this and they would but what people understand is if you pay that debt, it shows as a settlement debt. You paid it as a settlement, not a paid in full account. Because remember, you have your original creditor who sold that debt for pennies on the dollar to a collector. Now there's two debts. There's the original debt, and then there's the collection agency. They're both going to hit you. It's first of all, when the debt was sold to a debt collector, it's already shown on your credit. It was sent to somewhere else. So now when you pay this debt, that's going to be at a reduced cost. It's not going to be at the full fee. It's a reduced cost. So now instead of paid in full, closed at consumer's request, now it's going to show settled for less than what the debt was originally going to be. That still hurts you.
It does. So. And all the way around. And the same thing is, if I'm going to combat all these different people, which you'll hear later on in our next podcast, I'm going to keep you guys updated on the story. Who am I going to call to assist me? Because I realize I'm upset about this situation, which I believe I have every right to be. So logically, this hurts me in so many ways. But from this, I'm going to take it as a learning lesson, because as an agent, our job, like I said in every other podcast, we have to educate our clients. And every client we come is not going to check every box. Every client's not going to check the income. They're not going to check the credit. They're not going to check, how long they've had their job for and things like that. And so I believe that this specific experience, as much as it pains me inside and I'm boiling, okay, I'm going to take this and I'm going to write down everything I learned from this, and I'm going to write a novel. And then I'm going to use this as a guide to walk clients that are in a similar situation to help them, because I feel like this actually probably happens to more people than not.
It does. And I don't think people talk about it for a couple of reasons. Number one, pride, embarrassment. Whatever it is, whatever it may be. And I always tell all my clients, hey, at the end of the day, I'm going to get very intimate with your files. And I'm going to be very intimate with your finances. It's not that I'm trying to be personalized with you. What I'm trying to do is make sure that we cater this program directly to you, because no two loans are the same.
Yes.
No two credit profiles are the same. No two home purchases are the same. Land purchases are the same. Yeah. So there's always going to be something. And when you personalize it to your borrower, your consumer, and you educate them, it's a win-win no matter how you look at it.
Yeah.
And like you said earlier, you just said this. I'm going to reiterate the fact that everything is going to be different for different people. No two people are going to have the same check in the box. We've dealt with clients that have said, hey, I have an 800 FICO score, and when I go to pull a soft pull, it's literally a 530, right? Which leads me into the whole idea of Credit Karma, things like that. They pull from certain different areas, like Credit Karma will pull from TransUnion. When you do a home loan, you're pulling from all three bureaus. And so we take the middle of the two. So you take the high, you throw it out, the low, you throw it out, and you go with the middle. So if TransUnion is showing 540, chances are that could be most likely the middle score. And we're not going to use the two scores anyways when we pull a hard pull, right?
Yes. So. And then after your financial colonoscopy, normally what I have found, and this is just from working with clients and also myself, right? If me and my husband were to buy jointly for the next property, which was our intent, my credit now severely affects the deal we're going to get. It affects our interest rate. It affects everything. The investors are going to look at me as I'm a risk, which I know I'm not.
100%. And
I'm not.
Kevin
but it's
can
what's
have
on
an
paper.
800 plus, and you can have a 660. They're going to go with the 660.
Yes.
They're going to go with the lowest middle score of both borrowers, right? Which is really sometimes I don't think that's advantageous, because you don't build a relation, you don't build a financial portfolio together just for someone to be low and someone to be high. Something happened in between there, right? But then that goes back to certain credit entities or certain investors using different score models now. Now there's Vantage scores that are available. And in my experience as of late, when a FICO score is low, typically the Vantage score is higher. I've noticed that. And there's been some kind of disparity between the two, the opposite direction. So, which is really strange. But there are options to help alleviate some of that stuff, because I think
Yeah.
investors are starting to understand, with the economy being the way it is, not everybody's fitting into that mold, right? And so I think they're trying to open up different options to test credit worthiness and to be able to extend credit for people that deservedly so and have worked hard to be able to
Yes.
to reach that dream, right? And so with that being said, I think credit matters. And I think that it matters sooner than later is
Yes.
the biggest thing, right? Basically, the whole gist of this is to start your credit journey sooner than
Yes.
later. Because if you're waiting till a month before you get ready to purchase, you better
That's what
have all your
happens.
ducks in a row.
It's the same
for it to
with
work.
renting as well. If you're deciding I'm going to rent a new house or I'm going to move apartments or something like that, and then you have this happen, it makes it significantly harder.
Oh, yeah.
Or say you're renting a house, which I have a client in a very similar boat as myself, right? They're renting a house. Now the seller wants to sell it. They ask out, can you help me find another place? Of course. Well, we go to apply. She's thinking her credit, like you said, is this number, and now she's finding out it's a different number. How do we navigate it? And, credit education goes well past, I believe, just buying a home. I think it starts when you turn 18.
Yeah, but we don't teach it in school anymore.
We don't. But also, as soon as you turn 18, how many credit cards do you get in the mail?
A ton. You get,
Easy.
if you're a student, you will get 4 or 5 applications saying, hey,
Yes.
student applications. And it's almost to the point where you just sign your name, put your social, and
Exactly.
you get credit extended to you.
Exactly. And so again, that is the line we're playing with, because again, if you come out of the gate and you don't understand credit, or your credit knowledge is not where it needs to be, how easy it is. Oh, I have a credit card. I'm going to swipe. And next thing you know, you're 21 years old. You're really trying to buy a car. You're trying to do something, and your credit is in the gutter.
It's trash.
And you owe all this.
It's trash.
To be 21, 22 years old and have $40,000 in credit card
I've
debt.
been there and I've done that.
Yes.
And so
is my husband. We're going to throw him under the bus.
I think
That is
most
the
military
thing.
members
Most military
Yeah.
members fall into this trap. And see, that's the thing where I believe credit education just needs to transcend just the table of lending, the table of renting, just even the table of buying a car. You shouldn't go to buy a car and save up $5,000 and then find out you're going to pay 20% interest because you owe all this money.
Yeah. I mean, and when I was in the military, it's funny you say that, because we had this place in San Diego called National City, Mile of Cars. And it was actually categorized as a no-go zone for sailors.
There's so many that are like that.
Yeah, and it's because
Yes.
you could go there and you're like, oh man, this is, you're fresh out of high school, or whatever it may be. You go and you're attached to a ship. You have no bills. You're living for free. You're eating for free. Your medical's covered. The first thing you think of is getting a car.
Yep.
And
A
these
Camaro.
guys, these guys would they would prey on you. You go there and you're looking at a 29 to 30% interest rate. Here you are, E1, E nothing. You're living knees to elbows to begin with, and now everything's car payment and insurance.
Yes. And
you're
Rick,
stuck.
how much did you make when you were
Oh, it was way less than what they make now.
Oh, I know.
Oh, it was.
But tell me, because I want to compare what I made.
I want to say every 2 weeks, because it was the 1st and 15th, I maybe made.
I'm waiting to hear the number.
$800
You made more than me.
Yeah, maybe. Well, because I had CPay.
Oh, okay.
So I had CPay.
Okay.
And I had a C kicker. So consecutive 3 months or more, I didn't ever want to leave C because of that right there.
Yeah.
Once I'm at the short, he's like, oh man, someone just gut punched me. I just lost a ton of money, right?
Yeah.
But yeah, I want to say it, and then I had dependents. So I want to say it was roughly right around $800 every 2 weeks.
Okay.
But
with
still,
dependence, that's not a lot.
That's not at all.
I would say, because I joined several years after you. Not just saying that I'm younger than you, but even back then,
gracefully.
you do. A lot of people give you compliments on how you look on camera.
Well, that's great. That's great.
But as an A1C, I think I was making maybe $700 a paycheck living in the dorms.
Okay.
And let me tell you, if I went to the car dealership, they're like, oh, let me show you how to log into your MyPay, set up an allotment. They know everything.
Yeah.
And so I was smart enough where I did fall into a little bit of credit card trap. But I would say I've never had a credit card larger than $2,000.
Well, you're better than me.
And I was,
then.
because I didn't want that. I just needed to build my credit, right? I saved up money. I had like a little GMC. It was like $1,000. It was, anybody who knew me back then, I think my car was called Kid. They used to laugh and call me Chuck Norris when I would drive, because I had the spotlights from Texas Ranger on my little truck.
Lord.
But hey, it never went faster than, I think, 57 miles per hour, but it got me to work. But, and that's the one thing. I didn't know anything about credit. My bosses didn't tell me, but guess what? The guy next to me had like a new Charger, spending 21% interest. And then when it was time later for him to start a family, he could not buy a home. And I remember that specifically. So I was like, okay, I need to start Googling back when you would go to the library. We didn't have ChatGPT or AI. You had Credit for Dummies from the Barnes and Noble. And you start your credit journey. You didn't want to
read back then either. So
no, that's what credit or what is it? The for Dummies book was. It was like the easiest thing, but it is something that I think across the board. You're right. Young people, military people, we don't talk about credit enough to have that education. So as adults, I'm in my 30s. And we fall into these pitfalls, it's hard to talk about because of pride. How are you going to say, I'm in my 30s and my credit has plummeted and you don't know where to turn to? And then guess what? The creditors are like, pay it and it'll be fine. And then you can't recover from that.
Yeah. Yeah. I mean, I wish there was a golden ticket that, coming out of high school, you say, hey, this is why credit matters, right? Mm-hmm. People don't understand. I mean, millennials make up more of the income, the highest wages here in America today. Yet they own the least amount of homes, right? Yeah. Then you have me, who's a gracefully aging Gen Xer.
Like fine wine.
That's right.
I had to say it in the mic for you so everyone could hear clearly.
Make sure you remember that, okay?
The only compliment I'm ever going to give.
It's only one I've gotten so far. But we own more homes, right? But we don't make as much as millennials do. And I think that has to do with the education.
Yes.
And so this is more about education, right? In a less highlight kind of mentality, okay? Credit matters because, number one, it's going to give you better interest rates. It's going to give you lower mortgage payments.
Yes.
And not just mortgage payments for homes, but in general. If you have good credit, or let's just say above marginal credit, your chances at being able to afford things that somebody who's got horrible credit is way better. They're still going to be able to afford some things, but they're going to have credit rates that are 29, 30% interest rates, right? Not only that, they're going to be subject to more, I don't want to say, I use the term predatory lending loosely, but they're going to be more subject to those kind of options, second, third, fourth chance financing, where you coming in with a 700 plus FICO score because you maintained your credit, you're going to be looking at interest rates in the sixes right now, which is still kind of high, but we know nobody complained about the 18, 20% in the late 80s, early 90s.
Our parents were paying.
There you go. Nobody complained about that because home purchases were way lower, right? But you put yourself in a better scenario, a better situation, right?
Yeah.
Overall, you have more buying power and you spend less. That's the name of the game when it comes to our credit. So I think a lot of it is being able to mitigate some of the pitfalls of, hey, go out there and buy it on credit, when a lot of the times when we were growing up, it was like, if you didn't have cash for it, you don't buy it.
Exactly.
You just
don't
discipline. Buy it. You don't need it,
yeah.
And that's where we've kind of fallen into that trap now.
And you know what? That trap is everywhere. Like, you can go anywhere and get a credit card. Anywhere.
Yes.
A Victoria's Secret credit card. American
How many times
Eagle.
you go into a department store and they're like,
credit
hey,
card.
You want to sign up for a credit card? No,
credit card.
You're not getting me on this trap. Not today,
Best Buy, credit card.
Yep.
Like, man, I was like, I don't think even Walmart, you can get a credit card.
Oh, I know.
Target, I was like, wow.
I have Walmart card. Trust me, I know.
But now we can see, as long as you pay the statement and you're not paying the interest, it has perks. Yeah. There's always perks to every credit card. And I think leveraging those perks really makes you financially smarter. Like, and it's, again, that discipline. For people who use the credit card for the perks or the discount, but are able to have the money and pay it right after the statement and not pay the interest, that makes sense.
Yeah.
But if you keep racking up, and then you're paying 10% interest, 21% interest, because sometimes most people get credit cards, let's say the first 6 months, no interest, and then boom, 32% interest.
It hits them. We call that payment shock.
Yeah, payment. It shocked me just saying it out loud. Like, it hurts. It hurts in your guts. So I would say the two things that I remind people is set it on your phone. If you're gonna do that, right, and it's gonna be beneficial, like holiday season. If it's gonna save you money, you know what? And you have the money, you already intended on spending the money, do it. But make sure you don't pay the interest, because that's how they get you. And that's where you get stuck in that loop. No matter how much you pay and put down, right? You still have to pay the interest on top of it.
So there's a method, I've heard it, and it's probably named a bunch of different names, like the snowball effect.
I do the snowball effect.
So so does that work?
It does work.
Does it work?
So I think I did that my first time as a young airman, paying my cars and debts off, because I had lots of credit cards, because coming in the military at 18, I had no credit. I think my credit was like 300. So that was really starting out as a young woman in life. That's really hard because if you want to move out of the barracks, you have to have credit in order to get to an apartment. So I got, the military star card. Everybody gets it, right? Goodness. I always paid my balance. I did get, I forgot, a couple clothing store, I think a Macy's card, things like that. I got a Barksdale Credit Union card because why not? It was credit union.
It's on the Air Force Base.
Yeah, right there, right outside the gate, right next to the no car lot. But you do that. And that was one of the things when I sat in the bank, I asked a lady, how do I build credit, but also how do I not fall into this trap? And she explained the snowball effect.
Yeah.
I bought a whole bunch of stuff, and then I would pay off each credit card one by one. Even when I went and bought furniture later on in life, I think I maxed one credit card out to $10,000. I paid off all my other student loans and things like that. And so I had an extra $900, I think almost $1,000. Instead of saying, oh, now I have extra $9,000 or $900 a month.
Put that towards the next card. Yeah.
Boom, boom, boom. I lived within that smaller means. When I made staff sergeant, I lived within my senior airman means. So any extra money went to savings.
Yeah.
So it doesn't just work on paying credit. It actually works on building your savings account.
100%. And I think that's the biggest thing. And you kind of, you hit the nail on the head. It's living within your means.
And that's a big one.
So my mom used to always tell me, it's not how much you make, it's how much you spend.
Yes.
And where you spend what you make, right?
We have McDonald's at home.
There you go. So, that was another thing that you used to always say too. So the snowball effect, basically, for people that don't know, and I'm sure we've talked about it a lot of times, is taking your balance of a card, paying that card off, taking whatever that payment was for that particular card, moving it to the next card, right? And generally, it's the highest balance, or the lowest balance to the highest balance, right? And in the rest of the cards, you're just paying just a little bit above the minimum, so that you're not staying right at that interest rate. And then you compound it. So it's basically compound. You're taking a payment that was going here, it's paid off, great. Now you're good. You're taking that to the next one, paid off, great, is good. And then you're moving it to the next card. And that's what the snowball effect does. And what it allows you to do is, like Kealahni was saying, instead of saying, hey, I've got an extra $900 or $1,000 a month.
Let's spend it.
Let's spend it.
Yeah.
Let's spend it on paying down our debt. Now that you have more buying power, your plateau is up here now instead of right here. Now you have options. And not only that, your FICO score goes up.
Yes. So. Also, one big thing I did that on, which I was able to do a HELOC later, I paid off one of my houses. The one with the highest interest rate, I paid off first. So anytime I got extra money, we always file our taxes, right? Everybody usually gets a tax return. Anytime you sell a house or sell anything, you get any extra money, gift. Even I was saving up birthday money. I paid off a house in almost 7 years. Then what did we do? We did a HELOC on it. We used it to buy another investment property. Once
that was in Texas. Yep.
See, I've used Joe many times. I'm not a liar. But once I was able to start that trend with the snowball effect, then I take the monthly rent, pay back that mortgage payment, and then any extra money I still throw on top on principal. So now I'm so close to paying another house off so that I can, again, do another HELOC, pull out the money. Because if that's the point of buying a house, is it's not just buying your forever home, right? You want to establish a financial portfolio where you're investing in yourself. When you invest in yourself, not only is it something that you have a roof over your head for the next 30 years, and you pay it off, but we have equity. Even the last 5 years, how much have houses increased in equity, where even if you sold a house, you're going to definitely, hopefully make at least $100K. And then what could you do with that? Like in cash, like in your bank account.
Yeah. America's cash poor and equity rich. There's no getting around
100%.
it. We're cash poor, equity rich. The economy has been the way it's been, and it's forced people with families to literally be 4 or 5 credit cards deep with 25 to 26% interest rates maxed out. They have equity because they bought their homes at the time when they should have bought their homes. So now how do you get out of that? That's the biggest thing.
That is the biggest thing. And it is scary because even though there's equity, right? If you refinance and you have a 2% interest rate, because that's the magical interest rate everybody wants, 2 and 3%. But as soon as you refinance to pull that money out, now you're at the 6% or 5.5% interest rate. And that is scary.
It is, but that's why you have a good lender. Because I'm going to tell you right now, if you have a lender that can explain to you the difference between a blended rate and a fixed rate of what you have on a mortgage, hey, that's great. I love the fact that I have borrowers that come to me and say, hey, I don't want to refinance this 2.9%. Great, I understand that. But let's look at everything you have. You have that solar that needs to be paid off. You have those 4 credit cards that have a minimum interest rate of 26.99 and they're maxed out. and you're barely paying just the interest on them, right? So now let's talk about what that blended rate is compared to what a refinance is, taking enough out to be zero, be debt-free,
yes,
and have a 5.9 or a 6% interest rate or 6.25. That's okay, because if you take that blended 26.99, 30%,
yes,
mix it with that 2.9, now let's look at what your blended rate is,
yes.
right?
And that actually helps people budget monthly. It makes it so much easier to manage. And to me, that's that's a better way of budgeting than if you do a debt consolidation loan.
Very much so.
Because people are like, oh, I did a debt consolidation loan. I paid somebody. And then you paid somebody to do what Joe and I could do for you if you went to buy a house or even refinance.
And it was free.
Yes, and it's free.
So,
and with that, and he not only, which I know you do this, right? You don't just do it for people. You show them exactly how it's done, why we're doing it. And it sets up a year-long plan. So that way later, if they want to buy again or get a bigger house or do anything, now we have the buildings like blocks to do that financially. Yeah. So I don't recommend, this is me, my personal opinion, that you do a debt consolidation loan. I think depending on where you're at, the first step would be is talk to a lender if you're going to buy, because the fact is a lender will pull your credit, look at everything for you to see what your purchase power is. And they actually could advise you a little bit better without taking money out of your pocket or asking for 10% or charging you money where it takes you over a year to see some sort of result. Yeah. Now, there are some programs that can be beneficial, but I do believe every consumer 100% should shop before you just take what one Joe Schmo says off the street.
Unless the Joe is me.
Yeah. Oh, yeah. Your name is Joe. Haha. Yeah. I see what you did there. Okay. His last name is not Schmo. It's Page.
No, not at all. But honestly, and we've done a lot of deals together, and find a lender that's not afraid to lose the deal. Yes. Basically, what I mean by that is someone who's going to inform you, even if it's not beneficial to that person. Okay. Because at the end of the day, if we're saying, hey, we genuinely want to help you get into a home, then I have to put my best foot forward. I have got to say, hey, this is not going to be something I can do, but I guarantee if you find one of these products might work for you somewhere else, right? Yes. Don't be afraid to give the information that's right, and
we've done that together too. We always discuss what is best for the client, no matter what. Yep. Where I still close the deal, but unfortunately,
I'm not the lender.
You're not the lender. Yeah. Like it happens that way. But as my job, educating people not only in the lending process, I say I have a list of questions. It's like 25 questions. What she discussed with the lender. If you have a bank that's brick and mortar, right? Like certain corporations, they are stuck in a box of guidelines that they cannot break out of. Yep. You don't have those same restrictions. You have restrictions, right? Yeah. The Fed always has restrictions.
That's a fact.
But then sometimes those same restrictions also can get them a better deal depending on what they look like on paper. Yep. So I always say shop. I want you to get the best deal. Even shop for an agent. Sometimes I might not be the fit for you. Then I will refer you to someone else. My end goal is for you to get a home, for you to get somewhere that you are not house poor and that you can afford. And we've done that together where I've had to let somebody go or you've had to let somebody go and we still come together.
Yeah, it's I guess a bitter pill sometimes, but it's a pill you have to swallow in this industry. And if I say I'm trying to help you, I need to help you. There's
just like Karen says all the time, integrity. We hope that other people have integrity with us, that we have to first show that we have integrity with others.
So it's a relationship, not a transaction.
It is.
It's a relationship.
And then, it's so funny. It's talking about integrity, the zombie lot situation.
Oh my goodness.
So since you're way older than me.
Why don't you explain to everybody what the zombie lot is?
You're
it has
older
nothing to
than
do
me.
with age. Okay?
It does have to do with age. Age as far as how far this goes back. So in Pahrump, there's something called zombie lots, and Joe's going to explain his story about how he's personally affected by the zombie lot. Yeah. But so I've noticed, I think it was on the Channel 1 news, or I forgot what the Las Vegas news is. I don't know.
Channel 1?
I always say
have a Channel 1.
I know. I was like, what is Channel? I think I was watching a movie and everything's Channel 1. But recently, I believe on the local news, there was an issue where it's called zombie lots in Pahrump, where a lady had bought a land via auction out, and she still has to pay property taxes on it. But because of the size of the lot, where the lot is located, and how it was zoned, she now cannot build on it or do anything on it, but is still required to pay property taxes on it. Unfortunately, she built on it and put some I don't know how she did it, to be honest. I didn't get that far in the story, but she built her own little structure on it, and they were trying to kick her off legally.
Yeah.
But she owns the property. So what is she supposed to do? Well,
Yeah.
then I did a deep dive on a zombie lot because, wow, why is it even named that? But apparently in the 70s,
in the late 80s and early 90s, it was a big thing. And it's funny because I'm not quite sure if they were auctioned off, but I know there would be busloads of people that would go out there, and they were wholesale. They were the land was split up.
Yeah.
They were just huge lots of land. They would split them up, and this is how they zoned. They zoned them 9.5 rural.
Yes.
So, which meant you couldn't build a community on them. You couldn't build multiple homes for like city purposes, urbanized, but you could build like rural stuff on there, right? Like a farm or a ranch, things like that. The problem with this idea is that they were all so far and deep in there that Nye County would not cut roads.
Yes.
For you to have access to your land.
Yes.
Yet you were still paying property tax, and you're still paying. My parents, prime example, paying property tax for property that they cannot get to. We can't even, Kat and myself have gone out there with our side-by-side and can't even get to the property with our side-by-side. And Kat has gone as far as to go through her company to cut roads in. It's the terrain is so bad that when she's called out there numerous times to get them to say, hey, people are paying property taxes. They pay you to cut in the roads.
Yeah.
You don't have to maintain them, but you have to cut in the roads. They won't do it.
They won't. And it's acres and acres. Like there is several out there. And I was reading that there was a council meeting regarding that, like stop auctioning off this thing. So that's a part of having an agent. Or if you don't know where an agent that does land, I would say go to the Clark County or Nye County assessor's page. It'll show you parcel maps in the USDA website, and it'll show you what's USDA allowed, where you can build. It'll show you what the zoning is, and it'll give you numbers to call based on parcels, what you are and are not allowed to do. So the problem is people are buying like acres of land, $7,000. Well, granted, look in the grand scheme of things, Las Vegas, Mesquite, Moapa, that's a smoking deal. Get a half acre of land or an acre for $7,000 and then find out, okay, now you owe property taxes, but you can't get utilities set up. There's no roads out there. And see, these auctions go online, so nobody knows, right? Nobody does their due diligence or their research because you're just going off what a website says. And to me, I don't think that should be allowed. Like, I don't know the rules or how the county goes about relocating or moving the parcels, because when you buy land, you have to do a transfer of title. I don't know how these websites are getting away with this, but unfortunately, these people are falling into this trap. And like this lady said on the news, she spent her last bit of money thinking she's going to buy her retirement home out here in Pahrump, and now she's literally living in like a fort on land where she has nowhere else to go. And it's hot out there, guys. If you out here in the city, it's like 110. In Pahrump, it's like 117. The wind is blowing like a hot blow dryer. And this poor woman and other people are living out there in these conditions. And unfortunately, one of the other Nevada rules is you cannot live on an RV or any kind of fifth wheel, I believe, on any plot of land without a waiver. And the waiver has to have that you're going to build on the land, but you're not even allowed to build. Nobody will touch it with the 9-foot
So we looked at
pole.
the land we have. So we have land out there that's closer to Coal Creek on that side, on the Pahrump side, and that county side, right? And literally to get a well drilled, the water table was like 300 feet, something like, it was ridiculous.
Yeah.
And we looked at getting drillings to come out there. Drillers come out there. It was $1,000 a foot.
Yes.
And that's just for a well. That's not including the line to run electricity. So we were thinking about solar, but at the end of the day, if you can't get roads cut in there and the county's not willing to help get the roads cut in, it's almost, it's a wash.
It is a wash.
It's a loss of money for
because
you.
Our ground is so hard, and with the clay and the different terrain, you need, what is it called? A bobcat?
Oh, no, you need bigger than bobcat.
Bigger than a bobcat.
You need explosives to get to that caliche.
Well, you need some sort of mining equipment.
Yeah.
And even in my yard, even trying to dig for a pool or dig anything to grade a piece of land, it costs so much money. So anybody looking to buy land anywhere in Pahrump,
do your homework.
Yeah. Especially in Moapa Valley, Lopendale, there's several pieces of land that are actually considered rural because you cannot live on it. And they're still for sale. They have 2 or 3 acres, but they have it zoned that way because the grading locating and where the water table sits, especially because there's a lake out there, it says specifically you cannot build on there. And it's important to have somebody look up that information for you, or if you can reach out to one of us. I have a rural land checklist that I give out for free. Where to start, what are the questions to ask people, because you don't want to start putting money up thinking it's a good investment and now you're stuck. Right. We don't ever want
you don't get that money
lost.
Back. It's lost.
Or you have to pay property tax. You have to pay on something forever that nobody wants to buy, and you're stuck with it.
Yeah.
Yeah.
And then, and you know, I wholeheartedly believe that Vegas will grow, and those areas will, for the most part. I mean, if the only limit we have is water, I find it hard to believe they won't find a way to build, because these developers are coming out building in areas that we've had water issues for years now, and they're still building, right? So I see that's happening, but the problem is that by the time that happens, you'll be so far in debt, you'll sell it to one of these big companies for pennies on the dollar per acre, and it's just money lost.
It is.
So
that's the one thing everyone's dream is, I will buy a piece of land.
Yeah.
How many USDA land inquiries have we had recently?
A lot.
Where they want to buy land because it's expensive, to be honest. Who's going to be able to afford a $450,000 medium home in the city?
Yeah.
They're spending, let's be honest, the taxes range between $2,000 to $5,000 annually plus HOA. Some people are looking elsewhere to achieve home ownership, right? But we want to make sure you're educated. And that's one of the big things where I started that research. Most agents won't do that. A lot of agents will not touch land. There's so many legalities with land. And as one of those agents, if somebody comes to me, it's not, I guess, my job to know every single one, because I'm not perfect. However, I will make a checklist, or I will give you the number to call to do due diligence, because also laws change all the time.
Yeah.
What today might be zoned for one way, or how they're allowing things to be built in that area, tomorrow that might change. Every county, every city, every zip code, those things are constantly changing. So for me to, there's so many areas that we cover as agents, it's not realistic for us to know every single change. However, we should know where to point you in the direction to get the information.
Yeah.
I do believe that wholeheartedly. Yeah. So that rolling into that, the USDA land loans, it's free. The loan's not free. Just kidding.
No.
You can go on the website and look at a parcel number and see for free if the land would qualify, right? With USDA land, what are some of the restrictions? I don't remember.
Oh man,
if you're doing it, isn't it has to have a foundation on it?
Well, yeah, it has to be foundation. You have to be able to put a foundation on it, and it's got to follow all the timetables as far as the normal builds for like I would say like a modular home, mobile home. It cannot be moved. It has to be a foundation set on the property. It follows in the same guidelines really as FHA and VA does. Yeah. Matter of fact, the VA and USDA loan is real similar as far as zero money down, no PMI, things like that. But the stipulations are real similar also on as far as mobile homes. We just had a deal, which is surprising because our last three have been way out there, right? And it's surprising because I've noticed even with my investors, which are pretty liberal. I mean, pretty liberal as far as what they allow and don't allow. Even, I mean, I had a contingency as far as because the gentleman, one of the homeowners, work was less than a mile from where the house was, and it was a rural area. And so I had to go through jump through hoops to try to get that approved, right? Yeah. So it's a very liberal, very easy program. It's good for the consumer. I would say that I think investors are starting to get keen to it a little bit. Yes. And so they're starting to tighten up on some of their guidelines on those loans too, right? So I'm curious to see how it works out. And
that's what I am too, because specifically out in Logandale, like Moapa Valley, Overton, there's a lot of people buying land and putting manufactured homes on it. I just
wonder how the population is going to be. That's one of the biggest things is the population, right?
And there's not a lot out there. Like, I think it's a fantastic area if you're looking for country living. But then also one of the issues is like the seller will carry, because a lot of people did it back in the day. They just bought the land and built on it themselves. Yeah. But now it's not real property. Yeah. So now they're going to try to sell, and they're doing comparables based off something that is real property. And I'm not very good at explaining real property. Can you explain, like, on the lending side, like, what are you looking for?
Basically, real property means it's the foundation that doesn't move. Yeah. The cut-ins are all done. And you can't put wheels on and leave it on a drop of a dime. That's considered the real property portion of it, right? Whether it be not so much utilities as far as electrical, but mostly well water, or is it city water,
Yes.
sewer, and things like that. That's all what they look at for real property.
It is. And then when you pull the title for it, it has to
It
show
has
that
to
it's
show
converted to real property.
It has to be converted. So there's a process to go through, and that normally is during title or during the sale, right?
Yeah.
They suspend one and restart again, and it shows it's real property. It's a waiver, basically, is what it is. And I'm actually having that issue right now with one of our clients. But apparently, it's the property. The property profile shows real property, but because it's new,
yes,
it still hasn't been converted yet. It has to be converted at
and
close.
It's one of those stipulations. I remember it will be converted through escrow.
Through escrow at close.
Yes,
that's what it does.
Close.
Yes.
So that's like a part of it. But even say we're like, and let me take a step back and get my thoughts together how I say this, because manufactured homes are so unique. Back in the day, you buy a piece of land, you put it on there. People were not converting it because there's no tax, or the taxes are so low.
Yeah.
But now, because you wait so long to convert it, now it's high. It costs more money to get it done.
Yep. And
I think that's a big one.
I honestly could say that the manufactured homes are probably slightly more problematic than warrantable condos.
Yeah.
Non-warrantable condos. But I think that there's still a niche for them. I think that's going to be, honestly, based on the last 3 or 4 deals we've done, I kind of see a lot of them moving towards that.
I think so too.
People are starting to kind of want to get outside of the city. As they further get outside of the city, the more rural it becomes. I think that appeals. It appeals to people. It
does.
Nobody wants to be cooking in their kitchen and see somebody in the bathroom next door to them. So people are really, that's appealing to have land and your neighbor's kind of a stone throw away, you know?
That and no HOA.
And no HOA. That's a big thing too.
Probably the biggest one, I would say.
So, I mean, at the end of the day, I think HOAs serve their purpose to a certain extent. Some of them are really, I know we can all have horror stories about HOAs. I could tell you something about my HOA.
My blood will start boiling.
Yeah, you know, and then the cost is exorbitant for what for the services they provide, right?
Yeah.
I think we can agree that condos, townhouses are always going to be worse. And and really, if you look at some of the condos in this area, for the HOA cost that you pay, it should be pristine, and there should be armed security everywhere around there.
Well, I also believe like my first day in real estate, ironically, was helping one of my mentors with the client. She just bought a house, or sorry, let's take it back. She just bought a condo, and 3 days after she closed, the unit above her caught fire, and it obviously the whole sprinkler system took place and ruined her whole condo. Well, guess what? The HOA in the building had no insurance.
So it wasn't a warrantable condo.
No.
Then.
But guess what? She was able to pay for it. I don't know. At that point in time, I didn't know the questions asked because it was, again, my very first day in real estate. But then the HOA was allowed to raise their monthly payments to $1,500. Now, mind you, these condos were only maybe $180,000, $200,000. So you're paying double of what you would normally pay for a mortgage payment for HOA for something that's not your fault because they were not properly insured. And now half the building is destroyed. Multiple condos are destroyed, and people are waiting months to have livable conditions. To me, that's outrageous.
Yeah, it is. It is. It's just a way to get more money.
Yes. That's why I said my blood will start boiling. That didn't happen to me, but I learned quickly on how to advise someone to do an insurance claim.
Yeah.
Because a lot of people, again, that's the second thing. Once these things happen to you, nobody wants to ask for help. And thankfully we have ChatGPT and Grok. But before that, who do you call to file an insurance claim? Like, what do you do? So you know what? I'm an agent. If you ever find yourself in that situation, I will be happy to help you for free to start the insurance claim process on what to say, what not to say, and how to go about it, and also properly document everything in your journey so that you are covered. And I think that is a big one. I feel like any agent should help you, but I'm volunteering myself because that is such a terrible situation to be in.
I'm glad you're volunteering yourself.
I am, because I learned a lesson. Every situation that I find where it's negatively impacting me personally or someone around me, I take it as a lesson. And imagine buying a house and 3 days later, you're so excited to move in and get everything, and your house is completely flooded and now you have nowhere to stay. You're living out of an Airbnb or renting a hotel for 6 months and waiting.
Yeah, the buying a home process is exhausting to begin with.
It is, but
you feel like you're getting violated in so many different ways.
Financial colonoscopy. We're asking personal questions. How many times have you been married? What's your favorite color?
Yeah, it's
all
rough.
The things.
It's rough.
I think, but I think the biggest takeaway I would say from being in a team perspective as you, the lender, and I, the agent, and even all our guests on the show is, we are here for you no matter what part of the transaction or process you're in. If you're done buying, call 6 months later. Call Joe. How can I refinance? Our job doesn't stop once the transaction's over. And I think that's what people forget about us. We're here to help you. If you find yourself where you can't make a mortgage payment, that happens. Don't be ashamed. Maybe you can do a VA IRRRL. Yeah. Maybe you can do a refinance. Yeah. If you find yourself having issues with HOA, or you find yourself having issues with insurance things, or something's happening in your home, and you don't know who to ask, call one of us. We'd be happy to answer, because as adults being in that situation and feeling alone, I'm not ready to open my checkbook. I'm just saying mine's tight.
Well, especially with the issues you're going through
my
right now.
checkbook is super tight. I don't like giving away money or wasting money, and I don't like that for my clients either. So I always say that it doesn't end when we close at the table. No, I'm always here for you to educate you.
And I think the one takeaway from all of this, every podcast we do and every relationship we create is that right there. It's a relationship. Yes. It's not a transaction. Mm-hmm. We understand that you started at point A and you end at point Z, but it doesn't stop there, right? It's funny you said that, because on my way in this morning or this afternoon, I got a text message from a client of mine that I did a year and a half ago. Mm-hmm. Great. I'm not going to mention her name, but she's a sweetheart, right? And we got her into a down payment assistance program. Awesome. And she's like, "Hey, Joe, my doctor says I need to stop eating, my sodium's high. I need to stop eating ramen." And she goes, "What do I got to do to refi?" Right? And those are the kind of relationships you want to have with your clients, because she could have very well just said, "Hey, I'm going to go somewhere else," right? But we developed that trust in each other. Karen and I have a client, and he's amazing. His family came over from the islands, amazing, and we talk on a month to month. He's like, "Hey man, I made my first payment in February. When can I refi?" "Hey man, that's great. I know his kid wrestles." You want to have that relationship with your borrowers and with your agents, because at the end of the day, that's what effectively shows that you care about people, and not that they're not a number. They're a relationship with you, right?
Same with our first deal. Remember?
Oh, yeah.
Our first deal ever.
I went out to one of his mines and with my family was able to mine turquoise with him. So.
I went up there not too long ago because their daughter's graduating high school, and his wife cooks so good.
Oh, yeah. They're now coming back from the islands right now.
Me and her share a birthday.
Oh, wow.
I love that we saw the relationship where we call and talk and everything that's going on. If there's a golf tournament or what's happening, that I am in the loop, and that if they ever have any questions, they just call me. That's all it is. Just hit me up on the phone.
That guy's great. Let me just tell you.
He is awesome.
We texted earlier today because I was working on some turquoise that I got out of his mine, and I told him don't laugh at me, because I'm not gonna laugh at you, because he's experienced. They're the biggest on the West Coast, right? And meeting him, he's so humble. You would have never guessed that. Oh my God, he's not great. Even a little. Yeah, great. I mean, I tell you, kid you not, I called, said, "Hey, I want to take the family up there to the mine. We're gonna be in this area. My wife wants to do some rock counting, taking my son." He was like, "Let me make a phone call." Yeah. He called me back 30 minutes later. He said, "Man, I got a guy who's going to meet you at the Giggle Springs. You guys can go up there. He'll stay with you for an hour. He stay there as long as you want and get whatever you need."
I love that. That's awesome.
And that's how it was.
It is. So, and that's how I hope to have all my relationships with all my clients to be that way, because not only do I want to just do a transaction with you, I just want to have that relationship. Yeah. Like, just in general, I love people. And that's why I got into this business.
I think that's why we get along.
Yes.
Yeah, we get along.
And that's why I called you back after being in the military. I said, "Hey, I have a question about buying a house. I heard you could help me. Hey, I'm going to bully you because I need a new loan." But yeah, I love our working relationship, and that's what brought us together, because you've taught me so much, and a lot of the things that you taught me, I have taught other people, and then I continue to learn, continue to grow, and I can't wait to do a conference with you. Like we discussed, so I can continue to absorb some of this stuff and get it out to people. So I hope you guys watch our podcast, because not only we're going to have a good time and I'm going to bully him a little bit and you get to hear personal experiences from us, but we just hope you just learn something or ask us questions. Yeah, tell us what you guys want to know. I think one of the biggest things I'm noticing here, and I think we need to address this, is the condotel thing here. Oh my goodness. Everybody wants to live in a condotel because nobody wants it, but they don't understand the goods and the bads that come with that. Yes. I think that we need to cover that and address that. Let us know what you guys are looking for. What do you need? What do you guys need from us? What
what questions can we answer for you in a way that it's beneficial to you? Let us know.
And if anybody wants to guest appear on our show with us,
let's go.
You can be solar panels, you could be credit unions, you could be
title companies,
you could be our competitors.
Let's go.
Anybody, we would love to have your thoughts because again, it's about educating and everybody has an opinion. That's a fact. And we would love to hear what it is and how could you educate us more? Awesome.
Let's go.
Let's go. All right. Thanks, guys.
Thank you.